go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Of the Nifty implied open, that is indicating a positive start to cap up start today for the Indian markets.
Strong belief that the tariff rates will be back to their old rate within 5 months.
Both Jefferies as well as Motilal Oswal today have come out with reports opposed the fall that the stock has seen. Both of them have gone ahead and cut their target prices.
The Nifty opens above 24,600.
The stock is higher on the back of strong North America Class 8 truck order.
At this stage, it would be premature to draw firm conclusions.
Yes, the domestic coal price increase would be at a lag and at a much lower rate than what the international price is.
But probably 3,600 is where you've got to say a line in the sand.
The rupee is up about 0.65%, countering yesterday's 0.75% fall.
Aluminium prices have moved to the highest levels that you've seen, in the last few trading sessions.
If the things are not getting resolved soon, I assume that a similar action will be taken not only by India but most of the countries.
I think this could be, positive for some of our Indian refined products exporters.
The peak of the fear has already been priced in.
There is a process for reassessment of the AGR dues.
Mid caps, they're outperforming today, and it is after 3 days of relentless selling, there is some green on the screen.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me, as always, is Rima, and the markets are up close to under 100 points. We've come off a little bit in the last 1 hour or so, but we are still holding on to the gain of around 110 points or thereabouts. The Nifty Bank, well, that's virtually unmoved, and even the IT index actually is under pressure. So the heavy lifting actually has been done by Reliance Industries today, Rima.
Hi, but finally, right, after 3 days of losses when the Nifty was down 1,000 points, we are seeing a bit of a relief rally. And if you look at that intraday chart, the Nifty's been gyrating in a 100-point band. It's been 24,550 approximately on the way down to 24,650 on the way up. There you have it. There have been multiple times we've gone up, tested that level of 24,670 to be precise, and come down to levels of 24,550. And once again, in the last 10 minutes, after coming towards the lower end of that trading band, markets are trying to climb higher. 24,600 as we speak, up nearly about 0.5%. The Sensex has gained close to about 300 odd points. The mid-cap index has been outperforming since morning, and that's got a gain of close to about 0.4%. As Nigel pointed out, it's Reliance Industries, which is providing that leadership. That stock is up close to about 2.5%. China has taken a major decision ordering refiners to halt exports of diesel and gasoline, as a result of which the expectation is Singapore refining margins will go up, and that explains the powerful rally that you can see in Reliance Industries. Banks have been a bit subdued, and you can see softness in names like an ICICI Bank that's down nearly 2%, SBI has lost 1%, Axis Bank under pressure as well, and IT names led by TCS are a bit on the back foot. But Yeah,
I mean, we have some news coming in on Force Motors. SEBI has sought some details with regard to insiders, designated persons. For earnings, actually, that was in September 2024. So that's why the stock has come off a little bit. For the time being, this information that's asked, there's no allegation as of now. So we'll have to keep an eye out on that. But SEBI has asked them to furnish some details, and they're saying that they're going ahead and they're doing that. So just thought we'll highlight that. Highlighting it because the stock was up 4%. Now it's slipped from the high point of the day.
Sharp knee-jerk reaction coming through on Force Motors. A couple of other names, Coal India, Hindalco, it's fresh highs for these PSU names. And the entire one basket, which is showing considerable up move today, are the defense names. So whether it's BEL, HAL, Garden Reach Shipbuilders, across the board, you are seeing a big up move in the defense names. The index sector itself is up nearly about 2.5%. But let's also tell you what we've lined up on Closing Bell today as we unpack the final hour of trade. The Nifty hovers around 24,600. Broader markets come off from the highs but continue to outperform the larger peers. IT stocks are weak in trade. Metals extend gains. Brokerages turn upbeat on Coal India amid expectations of rising coal prices amid ongoing geopolitical issues. We'll decode the triggers. Muscat Dock Shipbuilders holds gains in anticipation of a large submarine order from the Indian Navy.
How do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, the markets are holding with a gain of around 100 points, but it's been far from convincing actually today. A day when you see a gap up of around 100 points, you'll want to build on to those gains. And I think both the top batsmen, both the Nifty Bank as well as the Nifty IT Index, they've been off form. So there's only so much that can happen in terms of a gain. Your view, do you think this is just a bounce before we go lower? If yes, would you look to short into this bounce? And fill us in with a couple of your trading ideas.
Good afternoon. So I think, the indices which you picked up, which is the Nifty Bank, I think I'm actually now watching the Nifty Bank very closely. If you recall the last couple of weeks when the market was declining, the Nifty Bank was continuously a pillar of strength, making fresh highs or even, holding well in a market which was negative. But today it is now trading at a very key weekly, which is a medium-term support level, which is around 58,480 to about 58,385. I think that band is a very important band. And today I think we got a low of 58,393. In case we see the Nifty Bank break below these levels, then I think the Nifty Bank could have a correction of its own, which obviously in turn will affect the Nifty. I would, then pencil in a test of around 57,750, 800 to begin with, and maybe even lower levels. So I think the next idea, if I want to short, I would want to see the Nifty Bank either break below the support level, or in case the Nifty Bank doesn't do that, then I think there'll be one more bounce back before the decline happens. For the time being, I have a sell call on SBI cards with a stop at 736. For targets of 695, and a sell on Pidilite with a stop at 1451 for targets of 1385.
Okay, those are some trading ideas for the last hour. Nalco, Hindalco, big surge in the stock prices, and aluminium prices, the base metal prices, have hit a 4-year high?
Well, that's right. Aluminium prices have hit multi-year highs on supply constraints, which has kept the prices elevated. As a result of reduced gas availability, Quartalum's announced the curtailment of its 650,000 ton smelter. Now, post that, you had Aluminium Bahrain with a capacity of roughly around 1.6 million tons capacity. They've announced a forced merger owing to the shipment constraint. Now, both these two, if you put it together, they constitute around 2.5 to around 3% of the global aluminium supply. While GCC countries, you put them together, they contribute close to around 8 to around 9% to the global aluminium supply. And most of the supply in GCC regions is gas-based smelting capacity. You also should keep in mind that smelter restarts are actually time-consuming, and they could take time once a smelter is curtailed for a while. So it's not just a shutdown. Restarting these smelters as well could be a bit of an issue. So that's why, in fact, the street believes that maybe supply is going to be restrained. And as it is, the aluminium market was expected to be in a bit of a deficit. Now it goes into a greater deficit. And if the greater deficit is there, then aluminium prices get some kind of tailwind and get a bit of a lift. Let's analyze companies. Nalco, they'll be a big beneficiary because they have the benefit of high aluminium prices. While its captive coal mines, they supply close to around 57% of the coal requirements. So they are protected from higher coal prices. Benefit of higher selling price and input cost more or less kept under wraps is good news. Vedanta, they benefit from their exposure to oil, their exposure to aluminium, as well as their exposure to silver. While Hindalco, the street is getting a little bit optimistic. Novelis could turn around in the coming quarters. Indian operations as is will benefit from aluminium prices. So put all of that together. Well, that's the reason why all these stocks are buzzing around. Well, we have gotten some news coming in, on CNN News 18. And I'm just reading it. Actually, I sent it to my ticker team as well to confirm it. What the reports are suggesting is that Iran has made a conditional offer to the United States. They're ready to abandon the nuclear program as of now. And let's get, so the statements coming in from the foreign minister. They're ready to make a conditional offer to the United States, ready to abandon the nuclear. So that'll be heartening if it's actually correct, and if it's actually factual. We've been getting a lot of news reports, but, just checking with our ticker team as well. For the time being, we're referring to what CNN News 18 is putting out. Hopefully this happens, Rima, for the good of humanity, for the good of the markets, good of economic activity as well across the globe. You want this war to end?
Indeed. It looks like maybe there is some hope that there will be a diplomatic development between the two sides, because up until, and I remember even yesterday, right, there was this New York Times article which again suggested that some Iranian officials had reached out directly to the CIA, and there was this conditional offer attached to it. They had laid out 3 conditions, basis which perhaps there was willingness to talk about it and end the war. But after that, Iran officials, there was, I think Tehsin had reported that, completely, baseless, not accurate, and just psychological warfare. Those were the words used by the Iranian officials, quoting, 2 sources when they dismissed the fact that there were overtures made by the Iranian officials to the US government. But let's see, this is what CNN News 18 reports, and this is coming from the Iranian Deputy Foreign Minister. We'll have to hope that maybe there is a willingness from both sides to talk and end the war, which has taken so many lives, resulted in so much destruction. So let's, fingers crossed to wait to see how this plays out. They've been
and I think I'm not sure whether we can get the Dow Jones futures up for you on the screen. I recall our ticker team putting out just, I think, an hour or so ago that it was down 325 points. The last I checked, it's down around 25 points. So there's a big recovery in the Dow futures as well, Dow Jones futures. Volume will be questionable out there, but from minus 300, it's almost moved into the green. So hopefully we're bracing for a better US trading session as well, Rima. Okay, but let's get in Deven Choksi, MD at DR Choksi FinServ, who joins us on the show. Hi, Deven. Good afternoon. Good to see you. When the aluminium stocks continue to remain in focus, they're doing very well. We discussed about it 2 days ago. What would you say? Now there is talk about this war ending as well. In that case, then a lot of the supply constraint could actually get leveled out. Would you take profits on some of these names?
Hey, Michael, good afternoon. Well, I think it's a good point to, book some profit if you are a trader, for sure. However, I think if you are looking at the business and the prospects there, probably the long-term tailwind is already in place for white metals as we see it. And there may be some price corrections to the current rally, that is not ruled out. But overall, the fundamentals of the companies are improving on 2 counts. On one side, the prices of metal remaining steady and firmer. On the other side, Indian metal becomes, I think, more attractive, both ferrous as well as non-ferrous, largely because of the depreciated currency. The cost involved, I think, for buying Indian metal would be relatively cheaper compared to, I think, buying the metal from overseas at a higher depreciated currency. And last but not the least, I think most of the metal manufacturers are actually, I think, relying on significant percentage of the renewable powers. And that's where probably, I think, we are likely to see next 3 to 5 years profit margin also remaining improving in this kind of a situation. So we believe that overall environment is becoming more conducive for metal as a whole, with demand scenario and profit scenario both showing relative amount of growth prospects going forward.
Okay, all right. We're not done with discussing, these stocks, Deven. Let's talk about Coal India. But first, let me just put out a piece. Brokerages, they are turning incrementally positive on Coal India, getting a little bit constructive out there. Citi, they've maintained a neutral rating, but they've raised the target price to 430 rupees. And they've placed the stock on a 90-day upside catalyst watch. The brokerage expects the elevated LNG prices to drive gas to coal switching. That in turn could support demand in the near term. Meanwhile, as Axis Capital, they've gone ahead, they've upgraded Coal India to add from reduce. They have increased the target price by around 10% to around 480 rupees. They have also raised their PAT estimates for the next 2 fiscals by around 8 to around 11%. Axis notes that its base case does not factor in the potential, any impact from the potential US-Iran conflict. However, they are pointing out if e-auction premiums were to rise to around 100%, they're working with around 60% or thereabouts, the brokerage estimates that the EBITDA could go up by around 12%. That in turn will push up the target price to around 540 rupees. Now, speaking of CNBC-TV18, the Coal India management said that international coal prices could move higher due to the geopolitical developments, though they said it's too early to conclude that Coal India's e-auction prices will move up. They also clarified on the e-auction segment. They said that the premiums have largely normalized around the 50%, though they've inched up both in February as well as in March 2026. The focus, however, they're saying, is increasing e-auction volumes rather than pushing up prices. with FY27, they're saying that the e-auction volumes could be around 10 million tons higher than what they do in FY26. This is only on the e-auction volumes. Overall, the company is targeting around a 5% volume growth, which will be a relief after the last few years. On the cost fronts, they say that the employee wage revision, that's due in July 2026, though the final quantum remains a little bit uncertain. Coal India also highlighted, when they spoke to us, that they are balancing their capital allocation strategy. Dividend payout has been around 45 to around 50% for the last few years, but the future payouts will factor in the capex requirement, which they are planning at around 17,000 crores per annum over the next few years. Finally, the company has reiterated its plans. They believe they are unlocking value for shareholders by listing some of their subsidiaries, and they're saying CMPDI will be listed this month, MCL and SECL will get listed during the course of the calendar year. But all that together, Coal India is higher in today's trading session. Devin, what do you make of this one? Volume growth has been, actually there's been degrowth. Pricing has been weak. Power demand has been weak. But the street believes that there is a story from here on. Do you believe?
Yeah, I think you're counted on each and every point. And I think that's true. The larger amount of volume is happening in Coal India on a consistent basis year after year. So that definitely gives you the confidence that the incrementally higher volume year after year is distinctly, I think, achievable and possible for this company. Now, today the situation is the coal prices are firming up because of the global conditions right now. Now, if this particular prices remain or it sustains at the current level or maybe I think go a little firmer, then certainly it makes a case for adding the stock into the portfolio, maybe for a momentum reason as well. As of now, downside risk we don't see, but how much further upside you want to see in a given turbulent situation, unable to make any comment. So if you are trading, then I think you'll have to trade with a strict amount of discipline as I see it. But investors, maybe I think the corrected price, always welcome to add into the portfolio.
There's been a sharp surge in the last 10 minutes following that news flow. The Nifty's crossed 24,700. It's now 1 percentage point gain. The Nifty Bank, which was flat with the negative buys, is now up 155 points. The mid-cap index is raised to a 1.25 percentage point up move. And the advanced decline ratio also fairly supportive. 2 stocks is to 1. But we'll have to wait by to see if there are indeed diplomatic talks and if it leads to a successful negotiation and a closure of the hostilities between the two nations. But for now, the street seems to be reacting to that headline, which is coming through, reported by CNN News 18, that Iran has made a conditional offer to the US ready to abandon the nuclear program. But more details or contours of that is not known as of now. Devin, L&T has also come in for a big rebound, 4.25% up on L&T after getting smashed in the last 3 days. We had many people coming out and say on the channel that it's an attractive proposition. This is one of those few companies which over the medium term is going to see a double-digit earnings growth. So the correction is an attractive entry point. Would you concur?
Yes, absolutely, Rima. I think the visibility of next 3.5 to 4 years definitely is seen in the revenue. Now, taking a view that the company might get impacted on the margin, I think it's only a view at this point of time. I would not concur with that particular view, which is basically talked about by many analysts. But at the same time, I think more importantly, if we understand the situation correctly, I think this war-related activity cannot last forever. And hereafter, I think the rebuilding of the entire territory regions are going to take place. Should that be the situation, I think there is no end to it. Probably likes of L&T would have relatively much better times, particularly because of their presence also in the Middle East region. I find that I think they are in a better prospects, I think, if this war-related situation comes down. So keep the finger crossed, but yes, I think it is available at a good corrected price. So could be, I think, an opportunity also in the downside is definitely, I think, not seen as much at this point of time.
Okay, all right. Well, let's focus on Mazagon Dock. That stock is surging in trade on anticipation of a large order. Ria joins us to break us through what's the news piece. Ria?
Well, yes, Mazagon Dock is surging in today's trade and they have a lot of large orders on the anvil. The first one is the P75I submarine order, which is estimated to be, the order value is estimated to be about rupees 1 lakh crores, and this was earlier 70,000 crores. So now the order value has been increased as per some reports. Now the company has said that the negotiations for P75 are already over, and they do expect this order to come through by the end of FY26. And once this order comes through, the order book for the company will also cross 1 1 lakh crores once the order comes through. Now, apart from this, they also have an order for the additional 3 P-75 Scorpion submarines, which is also expected to come soon. The company has said that the Navy is currently in the process of finalizing the deal, and they expect to close this by the end of FY26 or by early FY27 as well. And this is as per comments made by the company at the end of Q2 of FY26. Now, there are also some other potential orders that the company is bidding for. The first one is the landing platform dock, which is in the range of 35 to 40,000 crores. The mine countermeasure vessels, which is expected to be about 40 to 45,000 crores, and the P-17 Bravo ships, which will be in the range of 50 to 60,000 crores. The current order book, remember, of the company is just about rupees 24,000 crores. So once all of these new orders come in, the order book will inflate quite a bit for them. Apart from this, they had also given guidance at the end of Q2 of FY26. The revenue at the end of this year is expected to close at rupees 12,500 crores for them, which is a 9% year-on-year growth. And they will also see about 5% revenue growth in FY27 as well. In terms of margins, the margins will remain at around 15% for both FY26 and 27. And the company has also highlighted that they do not expect any major reversals or further increase in provisions going ahead.
Okay, all right. Thanks a lot for that, Ria. Well, they've been coming across to ask you about Mazagon. But, by the way, just pull up a few stocks. If in case things are de-escalating, then those that got hit will actually see some relief. Case in point being an Interglobe Aviation. The stock was down close to 3%. It's seen a big recovery from the day's low. So hope that travel goes back to normal, one stock. The other one is Asian Paints. Input costs would go up. That would hurt their margins. So paint stocks as well are seeing a bit of a relief rally. Adani Ports, the fear that some of their ports would get impacted. If things are going to stabilize, then you'll see a bit of a recovery out there. And the OMCs, remember, if crude oil prices move up, the beneficiaries are the producers. The ones that get hurt will be the OMCs. So you have not ONGC has moved down because crude oil prices could potentially cool off. IOC, BPCL as well as HPCL, all three of them should come up here on the screen. They as well as seeing a bit of recovery. The producers pulling back, the OMCs seeing a bit of a spike. Devin, what's your view on Mazagon Dock? You heard what Ria had to say?
I think probably one of the best deals, if this is through, could possibly give the larger amount of visibility for next few years as far as the company's order book is concerned. And even though the valuations have somewhat corrected, they are, I think, looking relatively more attractive now. I feel that the company, if it executes the kind of order that we are talking about, if it ends up executing it in a better manner, I think that this particular stock may have further tailwind to talk about. So yes, I think one can remain positive about the possibility. And once the order gets confirmed, it is going to be all the more happy situation, I believe.
Okay. Any thoughts on oil marketing companies? As Nigel was pointing out, there's been a sharp reversal in oil marketing companies and crude prices. When we started the trading session, Brent crude was at $83.50 per barrel, a little higher than that. And now it's cooled off to 82.4. And all this has happened just in the last few minutes with that news flow, that headline coming through of hopes that there will be some sort of a breakthrough in the conflict and hostilities. So crude prices have cooled off, and oil marketing companies have surged. Where do you stand on IOC, HPCL, BPCL? Because this too shall pass at some point of time.
So save and accept the momentum which is coming up into this particular stock for reasons one day plus, other day minus. But if you remove that part of it, I think most of the stocks are already trading at a fair valuation. And we don't necessarily trade the crude volatility as far as these companies are concerned. So immediately a view is not immediately forthcoming as far as the buying interest in the counter is concerned. Yes, other than this volatility, there is going to be some amount of stability seen in the business performance of this company. Once the crude oil prices remain a little bit more stable, one can take a view on that.
Okay, very quickly on Reliance Industries, what are the current GRMs, Singapore GRMs? Because I believe they've surged, which is driving the rally in Reliance.
So diesel connects have possibly been giving them a larger thrust because of the given situation in the global market and the European market, in particularly where they are exporting. The opportunity in front of them is largely in the area of procuring the highest sulfur grade crude. From even this kind of a situation where they are getting the advantage out of it. Venezuela crude, which I am referring to, is getting an advantage out of it. And even the kind of GRM margin on the diesel that you are enjoying And if the China indeed stops exporting diesel, probably I think this can even go further, strengthen further. So Reliance remains, I think, in a favorable spot as far as I think this opportunity is concerned. So I strictly don't believe that overnight the contracts rates change. It takes time for somebody to, I think, absorb those kind of contracts. But as of now, I think the momentum works in favor of Reliance at this point of time.
You can see that. Thank you very much, Dipan, for joining in. Reliance Industries now surging to a 3.5% gain. Get into a break on the other side. An interesting excerpt of a chat that we had with Motilal Oswal's Ramdev Agrawal on the other side. Stay tuned.
Welcome back. Well, we're getting some lies on Bloomberg that Iran's state-run IRNA sites by foreign minister on earlier US stocks. We don't know whether these comments that came out actually that resulted in this big relief rally, whether they were actually earlier. We have seen a good 150-point rally just in the last few minutes. If these comments are actually earlier, then we could see some kind of a cool-off, Rima. So still very, very fluid the situation out there. We'll have to wait for further clarity on this front. But in the last 20 minutes, you had a big surge on all asset classes, that were risk on, and you had crude that cooled off. But I think now crude is back holding at around $84 per barrel mark. And, we'll have to still wait there's no much clarity, Rima, I think so.
No, there has been a lot of flip-flop on the situation. And it's also, for a clap, you need both sides to agree, right? So even if overtures are made by Iran, Israel has its own agenda, Israel and US. So they also have to agree. Yes. And it all depends on what the conditional agreement, what the offer is, what are the conditional agreements to that. And for now, as we said, we don't even know if the statements made by the Deputy Foreign Minister are fresh or not, or it was a part of earlier diplomatic channels. Earlier, we don't even know how long back. Was it prior to the conflict, or were there some backdoor negotiations which took place in the last 6 days? So we don't even have any clarity on what the earlier stands for, how many days back. But for now, I think the only thing we can summarize says that we don't know what the situation is right now, and the markets seem to be reacting to that. There has been a big 200-point surge in the last 10 minutes on hopes of de-escalation. We'll have to see. We've got 30 minutes to go before we wrap for trade, where the markets come off in the last 30 minutes because of this uncertainty persisting.
Yeah, I think we saw a big surge because of this, whether or not these comments are actually new. They're seeing actually the markets have fallen for 50, 60 points in the last few minutes because it's still very, very fluid. But I think for the time being, let's go across to Hormuz. He's here to tell us, all the top movers in trade. Hormuz, let's get back to the market action.
What the last few minutes have been for the markets as of now. But the bigger talking point has been specific stocks, and one name that has been in the spotlight all through the day has been Mazagon Dock. And from a start of around 2 to 3%, the stock has built onto those gains, now trading 8% higher, the biggest single day gain in volumes that the stock has had since May of last year. It snapped a 3-day losing streak, possibly the only defense stock that was underperforming in the last 3 sessions. The premium here on the 2400 call option has gone up by almost 300% in today's session on the FNO side of things. On today, as of now, close to 90 lakh shares have been traded so far on Mazagon Dock. The 20-day average is of around 6.5 lakh shares, and almost 2,000 crore worth of shares have changed hands so far. When considering the volumes, only 15% of the total number of shares that have been traded so far are marked for delivery on Mazagon Dock, which is now the third most traded stock on the Nifty 500 in today's session. On the downside today, Aegis Vopak, of course, a news flow driven name, still down 6%. The top loser on the Nifty small cap in today's session. It's the 5th straight day of losses for the stock. It shed 20% in the last 5 sessions during this 5-day losing streak. And today is the second day in a row where more than 10 lakh shares have been traded on the stock. That close to 30 lakh shares already been traded in today's session. The 20-day average is around 6 lakh shares. And 1/3 of those shares that have been traded today have been marked for delivery. And as a result of this 5-day fall, the stock now trades below its IPO price. It's a recent listing below its IPO price now of 235. Now LT Foods, on the other hand, the top gainer on the Nifty 500 today, 15% higher on the stock, the biggest single day gain in a month. It had gained a similar quantum in February as well. It snapped a 6-day losing streak today. Volumes today are the highest since September of 2009 for LT Foods. Now 3 crore shares have been traded on the stock today. The 20-day average is around 7.5 lakh shares, and as out of those 3 crore shares that have been traded, 12% of those are marked for delivery, and the turnover today so far 1300 crore rupees, 23% of its free float market cap. And lastly, Netweb Technologies, that stock is showing no signs of any cool off. 6.5% lower today as well. The top loser on the Nifty 500 is slightly off the day's low, was down around 8.5-9% a few minutes back. Now it's down around 17% in the last 3 sessions. Volumes though have been declining for 4 straight sessions. Today's session we have had 40 lakh shares traded, 20-day average of around 30 lakh shares. A quarter of those shares are marked for delivery, and turnover today as well is more than a quarter of its free float market capitalization. Now of course we have 30 minutes for the markets to end, and just after that we divert our attention back to the Wankhede Stadium just a few minutes away from now, and the big India-England semi-final.
Few minutes? It's at 7 o'clock. It's 3 o'clock.
For a cricket enthusiast, it's few minutes. So you can say that it doesn't take too long.
All right. So I'm guessing that all of us are betting on India, winning this and making, us through to the final. But who do you think is going to be the star player today?
Who do you think?
Who do you think?
As long as the team wins, it doesn't matter who's the star player.
But I just said in the last match, there was this one Sanju Samson, right?
Yeah, it was. And you would bet that if the openers, it's a big match theory, right? You get the runs on the board, it's always good. For the runs on the board, you need the openers to fire. And if Sanju Samson does what he did just a few nights ago, it's always going to be a good thing. It bodes well for the team. A good start is always a good finish.
And as I said this morning, the semi-final is a resistance level, right? If we win, we break out.
We break out.
And for the final, it'll be all-time highs. So it's going to be amazing because, just if you recollect the last time, I think India played a semi-final against England was in 1983, the Prudential Cup, and we went on to lift the cup. So I'm hoping that the boys in blue do it yet again. And I'll tell you what, when it's at Wankhede, I can't miss the game. Going to be there with my son, wearing the blue jersey and cheering for the men in blue. It's going to be an absolute spectacle. And I'll tell you what, I'm very, very confident today. India is coming out on top. The Black Caps, we're coming for you.
We break the semi-final jinx, of course. That's one thing because
there is a semi-final.
There is a semi-final jinx actually because we do have pleasant memories of the Wankhede back from 2011. But the last time we played a World T20 semi-final at the Wankhede in 2016, we ended up on the wrong side of the stick. That's not what we would expect.
Not this time.
Not this time. Yeah, we keep our fingers crossed for that.
There are various other jinx as well, but we don't talk about the jinx for today. We cheer the boys in blue, and they're going to come out on top. So, Rima, make sure you're here to borrow the ball.
For me, it's Hormus at 7:30, right?
No, it's going to be Viti at 7:30.
But clearly, we've got one eye on the markets and one eye on the cricket match, and we'll be watching it. But in the meantime, let's get some advice then from viewers. How should investors be positioning themselves in such a volatile environment? Nimesh spoke with market veteran Ramdev Agrawal of Motilal Oswal Financial Services. Listen in.
All the users of the technology, these platforms are built on the bedrock of, say, internet or what are other technology, digital technologies. So they are adopting very fast.
Sure.
In fact, they are adopting very fast. And other day, I was meeting a company, and he was saying that we are growing at 40%, but my number of tech guys, they're at 200, and we don't need. And whosoever is living from the 200, we are not redeploying. So if 200 goes to 180. We work with 180, but my growth is 40%.
Correct.
So, that's so basically the capability of a tech team is going up. So all the users will be very happy.
Sure.
If I'm running a 600 people IT team in India, in Motilal Oswal, I think I can grow 5x or 6x, and still I may not need significantly more number of people.
So you're still bullish that the TAM is very large for these platform businesses. And maybe Eternal can become a 10 lakh crore market cap, Swiggy can become a 1 lakh crore market cap.
Those opportunities are not impacted by AI. If anything, if there were 5 guys surviving and winning, it will become 4.
Okay.
See, one of the big thing about the world wealth creation, if you see, there is a massive concentration of wealth among the top 10, 20, 30 guys.
Right.
And every single segment, whichever is the wealth segment, like say if it is a quick commerce, or is it a, say, social media, or is it a search, there is one guy, and that guy is almost like $1 trillion. So the winner takes it all kind of situations there.
Yeah.
So increasingly more and more segment of the commerce or the industry is becoming winner takes it all.
Sure.
And hence betting on the leader, even in a physical world, is becoming quite rewarding.
Ramdev, you spoke about, you can firmly talk about the capital markets, and in that vertical, what will do well. Give us some ideas on what within the capital markets is expected to do well.
Yeah, again,
the AMCs or the broking companies, because you all are a mix of everything. But what segment, according to you,
wherever the guy is good, wherever the guy is leader, who is the volume leader, who is the cost leader, and hence the profit leader, he's the guy who is going to do well.
No, but
and every segment will have one big winner. Say in mutual funds, which is going to be huge. Like right now, maybe it is 80 lakh crores, and I think in next 10 years it will be 800 lakh crores.
The mutual fund business,
mutual fund AUM.
AUM, sure. 80 lakh crore.
Right now it is 80 lakh crore.
80 lakh crore.
In 10 years it will become anywhere between 600 to 800 lakh crores.
Wow. Okay. So that big is the TAM.
That big is the TAM right now. And after that 10 years also another 10 years there.
Okay.
So it is very scary to talk about that.
Sure.
So, but then I don't think the top 5 are going to change in next 5 years.
Sure.
So all of them are going to mint money.
Correct.
Unless they are completely mismanaged.
Yeah.
So all these top companies, they are managed well. So all of them have the same chance.
Yeah.
Now something is at 20p, something is 40p, something 35p. Now it is all depending on the leadership.
Yeah.
So where the leadership is good and you think it is likely to remain good, I think those guys will win big.
Correct. Amritji, the other big thing was the big support for this market in the last, say, 2-3 years has been the retail money. The problem is in the last 18 months, the returns have been quite negative or flat. Are you getting a sense now that there's a bit of frustration, people are getting tired, the SIP flow can actually slow down or turn negative? Is that a risk for the markets?
Yeah, I mean that it's all investor behavior, crowd behavior. I mean broadly still they are sustaining, but yes, it can slow down significantly. Say if they are bringing say this thing SIP money say 25,000-30,000, that might come down to 15,000 or 12,000 or whatever. That can happen. But see, the markets will not be made by who is coming and who is going.
Yeah.
Price will be made by how well my corporate world is doing.
Sure.
If my earnings fire up, then retail will come, foreigners will come, and HNIs will come. Everybody wants to buy.
Right.
But if companies are doing well, everybody wants to sell.
Sure.
So the real issue is not about what retail is doing. The real issue is what the corporate performance is doing.
No, which is fine. So you're expecting 15-16% kind of earnings growth, right?
I'm expecting 15%.
Which means like a 15-16% returns. But that will also be very, very selective, right? So in current environment, given so much of uncertainty, other asset classes doing good, is there a risk of the retail money which was helping the markets to float high, that can actually fizzle out?
See, on 12 months basis, something can do very well. Sure. But on a compounded basis, it is very tough to find equity kind of asset class.
Sure.
At around 12-15%, that's the index return.
Yeah.
If you are smart, you can make 18%, 20%. So those kind of possibilities are not there in many asset classes, and the amount of money it can absorb.
Yeah.
I mean, you can, I don't know, I mean, I've never bought gold or real estate, but they are very chaotic asset class. Yeah, I mean, like in real estate, yes, you can buy a land parcel and it might give, but to handle a 100-acre land parcel,
it's not easy, nightmare, absolutely. And even entry exits are tough.
But here, you can have a 10,000 crore portfolio and you don't have to come to office.
Right.
So liquidity is T+1. Here, if you want a piece of land and you want to sell it, I think it's a Hercules task. So I think what is important is to understand the power of equity, the compounding power of equity, and that 12-15% comes with an up and down both.
Yeah.
It's not that this downturn which is there right now recently is not part of that 12%. When you say equity is going to do 12%, it is actually going to do 20% and minus 8% of decline. So right now we are enjoying the downside.
In fact, Nimesh is also joining in now to talk about what he's picked up from dealing rooms. It's D Street Chatter time. Nimesh, great conversation with Ramdev. What was the one point that stood out for you? And then tell us, what did you learn after speaking to multiple people in the dealing rooms?
As far as Ramdev's interview is concerned, one of the biggest takeaway for me was, even for a value investor like Ramdev Agarwal, the biggest challenge right now is the valuations, and at ease at which you can buy stocks or build the portfolio. There are a lot of good companies. I asked him about what are the trademarks with regards to say Bharti when he bought initially at 40 rupees, or for that matter Hero MotoCorp, or for that matter AU as well, where he's made 100x. His response was there are a lot of good companies right now. The only issue is the valuation. He's not getting at the comfort at the value at which he would love to buy. So that's the biggest challenge for an investor like Ramdev at this valuation. So that was the biggest takeaway for me, honestly, from whatever he spoke about. From a market perspective, Rima, it looks like it's a powerful short covering rally, and this was something which was expected. If there is some noise with regards to the Iran deal or some ceasefire, you would see this kind of a sharp pullback rallies on short covering, and that's exactly played out in the last 1 hour of trade. Having said that, I've been saying for a while now that the flows are not that negative. Even yesterday, when the FI sold 7,000 crores, there was an equally large, big number from the DIs in terms of buying, so the net number was positive. Even today, the sense is that the FIs, or for that matter, the numbers are not that negative, and there is buying interest, especially in the large cap names from the larger institutions. I guess, still from a technical point of view, the Nifty range seems to be 24,250 on the downside. That's a very crucial support to watch out for. and maybe we are heading into the resistance, near-term resistance of 24,850 on the Nifty. So that's something to watch out for. Again, you'll see this kind of noise and big rallies as and when you hear as to what happens to this entire geopolitical risk. So that's something to watch out for. But I guess today's move seems to be more of short covering, and to a larger extent, if there is buying, that's largely in very, very selective large cap names.
Indeed. What about stocks? What have you picked up?
So the first stock on my list is Bandhan Bank. That's been buzzing in trade and good volumes as well. Again, my sense is that there is a buying interest from large institutions into Bandhan Bank, but equally there is a big buzz that maybe you'll see some corporate development, a potential fundraising could be lined up in Bandhan Bank as well. So that's a trigger as far as Bandhan Bank is concerned. The second name is Wipro. IT in general has been negative, but Wipro stands out because even after such a correction, there is massive selling pressure in Wipro from institutional investors. In fact, a global fund seems to be an active seller in Wipro even at current levels. And last couple of names where there is delivery-based buying today, UCO Bank stands out, as well as IOC. So both PSU names, but in both these names there is very strong delivery-based buying. So it may not reflect in the stock price movement today, but at least from a delivery point of view, you'll probably witness that there is delivery-based buying in both those names today.
Okay, thank you very much for that. We're seeing the markets cool off. In the last 1 hour, there was a powerful 200-point rally on the Nifty. The Nifty rallied from levels of 24,550. Actually, it was a near 300-point rally, 24,550 to almost 24,820 thereabout. And from that level, we've seen the markets cool off. So at the session's high, we had conquered 24,800. And now, as you can see, we've slipped about 100 points from that level. Get into a break. On the other side, we'll get you a few BTSD calls. We'll invite Mitesh Thakkar back on the show. Welcome back. 12 minutes to go to wrap up trade. The Nifty will end in the green. It's a powerful short covering rally after 3 days of losses. But we've come off about 130 points from the session highs. What should you do? Mitesh Thakkar is now joining in once again. Mitesh, what is the call?
Yeah. So, a slightly tricky market, but I would go with some long positions. Sun Pharma is a BTSD. Keep a stop at about, let's say, 1772 and target of 1800, 1805 for tomorrow looks quite plausible. And the other one, see, the metal stocks have done. We had a buy call on Nalco yesterday and today as well. It still looks like strong to me. So BTSD here can be taken with a stop at about 394 for targets of 404.
Today, it's Natco and Aurobindo Pharma in the pharmaceutical space, which are advancing as both the companies have launched a generic version of an oncology drug. Pomalyst generic in the US market, where the market size or opportunity is $3.2 billion, and Natco and Aurobindo Pharma both have a 180-day exclusivity on this oncology drug generic version, Natco and Aurobindo Pharma, and you can see interest in these names. Sudeep Bandyopadhyay, market expert, joining us on the show. Sudeep, thank you very much for joining in. You want to tell us any interesting stock ideas that have swum into your care?
Well, I think, last time also I mentioned it's a great opportunity to pick up Larsen & Toubro. I think post the correction, it did look very, very attractive. These war and this conflict will get resolved. It's a matter of time. But the kind of contract Larsen & Toubro has, I think the opportunity of them is getting more contracts and more business post-war for the reconstruction even increases. Domestic business has been strong, and their defense unit has started doing very well, getting incremental orders. The valuation definitely even now looks attractive. So Larsen definitely is a buy post this correction which we have seen over the last few weeks. There are multiple other opportunities and some stocks which one always wanted to buy, but because of valuation challenges, one couldn't and didn't buy. I think it's been a great opportunity, this correction, for those kind of stock picking from long-term perspective.
So do you want to tell us what you have bought?
Well, I did buy Larsen & Toubro. And I think,
other than that?
Yeah, other than that, I did buy some Eternal. Again, the correction in Eternal I thought was a great opportunity for buying. I have been accumulating Vedanta for some time, and I think my logic and my thesis on Vedanta still stands strong. All these conflicts, these were not planned, but they do help Vedanta in a big way. Look at what's happening in as far as aluminium prices is concerned. And Vedanta anyway gets about 50% of its EBITDA from aluminium business. And with the way the aluminium prices are going to shoot up based on the shortage which we are now going to witness, I think it's again good time for Vedanta. Oil and gas price going up again suits Vedanta. So does silver. So I think from all points of view, I think Larsen, Vedanta, Eternal, and many more such good quality stocks with strong management are good for picking up at this stage.
Kada, we'll come back and continue our conversation. For now, it's time for a short break. Welcome back. 4 minutes to go, and looks like the Nifty may be able to defend that 24,700 mark, though it did cool off from the highs. Remember, Asia had a very strong session. Key indices gained up 2 to 3%. Kospi in particular surged 10-odd%. For the Indian markets, after losing 1,000 points in the last 3 trading sessions, we recouped about 250 points. So about a fourth of the losses that we had in the prior 3 sessions were recovered today. In conversation with Sudeep for the last leg of the show, Sudeep, anything in the defense stocks that you like right now?
Well, I talked about Larsen already, and though it's not classified as a defense stock, but I believe there's a fantastic defense business inside Larsen, and definitely it's a good buy. Of course, there is a lot of excitement in Masgao Dock based on the expectation of some of these order wins, which can take their order book to about 1 lakh crore, which should be fantastic for Masgao Dock going forward. But yes, at this stage, till the time it crystallizes, it's very difficult to predict. We have been liking Bharat Electronics for quite some time, and the stock hasn't corrected. I was waiting for some correction. It hasn't corrected, but if you're a long-term investor, I think it's still a great buy if you have at least 1 year plus time horizon in mind. Other stock in the private sector which is building a defense business is Bharat Forge. Again, it's a small business at this stage, but the order flow is steady, and I think it's going to grow going forward. So one can look at Bharat Forge also. Even the other businesses have started performing well.
Reliance Industries, what's the analysis? Basis the crude price rise, Singapore GRMs?
Absolutely. I think with this China announcing the stopping of exports, the Singapore GRM is definitely expected to go up. In any case, Reliance has the capacity to refine multiple grades, and their GRM is always much better than Singapore GRM. But with Singapore GRM itself going up, their GRM also should be significantly higher. So obviously they do benefit in a big way. And, I think anyway, Reliance is available at a very reasonable valuation when you compare with the market generally.
Okay, Reliance's valuations are also reasonable. Petronet LNG, 5% up on that. One would have thought the Qatar LNG news, the supply shock is negative, but stock is up.
Well, I think it's got to do with the news which is coming that some kind of, ceasefire and some kind of cessation in hostilities may be announced very soon. And I think that's kind of getting the market excited, including these stocks like Petronet LNG. But I'll be extremely cautious. I think, we'll have to wait and watch. There are multiple news floating in the market, and it's very difficult to rely on some of these and go and start getting long on Petronet LNG. They have a genuine problem if the war continues beyond the point.
Sudeep, just winding down today's trading session. We'll come back to you and chat with you in Markets Forward. For now, the Nifty and the Sensex likely to end today's trading session with a gain of 1%. The Nifty higher by 250 points to close above 24,700, though it came off about 100 points from the top. The Sensex has surged 1,100 points, but it's ending with a gain of 800 points. On the winners list, it's Adani Ports right on top with a gain of 4%. Hindalco, Nalco advancing 3.5%. L&T was the big mover. It had corrected 10% on Monday and Wednesday combined. Today, it's recovered 3.5% of that. Defense stocks continue to see upward momentum. A stock like BEL has gained 3.5% today. Masgao Docks was the big winner. And data patterns also up and about. Reliance Industries made a powerful up move today, 3% up. Coal